What's going on, everyone? It's your boy Moo Trades. We're back with another video. In today's chart lesson, we're going to be going over the specific price action and scalping technique that I use in combination with a runner in order to pass the evaluation accounts and then to use the same method in the paid performance accounts by Apex Trader Funding. So I also have a live trade that I recorded that I'll be going over at the end of this video. But first, let's head over to the Apex Trader Funding website to see what I'm talking about. Okay, so now that we're in the Apex Trader Funding website, all you have to do is click Get Started and it'll take you to the multiple different options they have for trading accounts. So it starts with a $25,000 account all the way to a $300,000 funded account. So a lot of people see this $300,000 number and get very excited. But in reality, what you want to focus on is this trailing threshold number, which is $7,500. So really, it means you have $7,500 until you can potentially blow your account if you do not pass it. But what I like to focus on is the $50,000 starting capital account because it's the best bang for your buck. And in my opinion, it's the easiest to pass. So the profit goal is $3,000 as opposed to $20,000. And you still get a trailing threshold of $2,500, and the price is $167 a month as opposed to $657 a month. But if you go to my description and click my link, my affiliate link, this will be only about $35 a month for basically $2,500 worth of value. And then if you pass the account and transform into a paid performance account, which I'm going to show you guys the method I used to do so, then you could be on your way within about 7 trading days to trading live and having a goal of $3,000 and you have a trailing threshold of $2,500. And in these markets, it's really not that difficult if you just have a few good trades to make this reality. So let's go back to the chart and see what I'm talking about. So the price action method that I use, as I spoke about, is I like to go for a scalp and then a runner as well. So with the $50,000 account, I go for 2 contracts, and one is a 1.25 point scalp, and one is a runner. So I also use limit orders, and I place the limit order 1 tick before the close of a given signal bar. So it just gives me a little bit more caution as opposed to using stop orders and a little bit less risk. So the day started off with some crazy volatility. I mean, the entire day was very, very volatile. But if you just focus on these price action methods, they work for incredibly high probability setups. So we see a 2-legged pullback right here at the EMA. This is about 1 hour before market open, but we are in a very, very, very strong downtrend. So we want to look for 2-legged pullbacks in the short direction. So here we actually have a 2-legged pullback. We have a new low. We have 1 leg up. We have a first entry short. And then we have another leg up and a second entry short. This is at the EMA. The bar is not very bearish. So we don't want to enter short just yet. And we want to wait for a lower high. So now that we get this lower high, it's basically confirming that the shorts are still present in the market. And we should join them and go short with them. So here, I would have placed my order after this signal bar closed and the next bar triggered, aka it went below it. I would have placed my order 1 tick above where the close of the signal bar was. I would have got filled. I would have had one target only at 1.25 points, so 5 ticks, and then another target that automatically went to break even as soon as the scalp portion was met. This platform is NinjaTrader, and we're trading S&P 500 futures. And you can set that up using automated strategies very, very easily. So now prices just stall a bit and then continue working down. They work down and down and down. And at this point of the day, we're just only looking for short setups because everything is telling us that this market is in a massive sell-off. So once again, let's look for potential 2-legged pullback. We have a new low. We have 1 leg up. We have a first entry short, we have another leg up, and we have a second entry short, once again at the EMA, bearish signal bar. Let's go short, and it would have worked out for a several point scalp. But even on days like this, a lot of people like to scalp for greater points. So 2, 3, 4 points, but the highest probability, if you only scalped for 1 to 1.5 points today, you probably would have had a 100% win rate if you took up to like 20 trades. On the other hand, if you went for more scalps or more points on your scalps, obviously the win rate would go down and you would be getting more money per trade. But it's just my particular method, especially coupled with a runner. You still can get 20, 30, 40 point runners, and the scalp portion is still just some money in your pocket. And then if you really follow the rules, then you will also find that the runners will come and they'll just make your day that much better. And I'll show you guys what I'm talking about in a second when we go over the live trade later in the video. Okay, so now we're in an interesting spot. We pushed above the EMA, so we have a larger two-legged pullback in place. So we have one leg up here, we have another leg up, and then we reach the EMA. Instead of being bearish, we actually have a very bullish signal bar. And we also have a two-legged pullback in the long direction. So we have a new high, we have one leg down, first entry long, we have another leg down, and we have a second entry long right there. So in real time, it was difficult to take this trade simply because we had such a massive downtrend. But looking back, this is a very good trade simply because incredibly bullish signal bar, two legs up, as we mentioned, and it's a perfect second entry long. It would have worked out for a scalp. And then we just had a lot of congestion. Today was really about just being patient and waiting for setups to appear. And even in the beginning of the day, I mean, look how many two-legged pullbacks we have. We have one leg up, two legs up. So now, in real time, I took this trade. I did not take this long because, like I said, we should really only be looking for shorts. We have this strong downtrend. We're still looking to potentially test this new low of the day. Once again, two-legged pullback. Nice looking signal bar at the EMA. And that baby went down. So now we just had a lot of congestion. This congestion really was present throughout the entire day. So you had to just be patient, like I said, and just wait for the high probability setups. So we finally break out of the congestion. We almost tested this new low of the day. But now at this point, we can start looking for long entries because we had such a strong relief rally. So now we can look for two-legged pullbacks in the long direction. So we have one leg down, we have a first entry long, and now we have a second entry long. This signal bar is not the best. It's not touching the EMA. Just for illustration purposes, this is a two-legged pullback, but I would not recommend taking this, especially because we do have this leg working down. We have not had a new low of it, and the rules with downtrends are that once there's a break, which we have here, and a new low, then we can consider it to be over. So we're still expecting to potentially test that low. This long trade would have worked out, but it's better to be safe than sorry. So now that we traveled such a long way up, and we have a nice two-legged pullback once again, one leg down, we had a break of it, another leg down, nice bullish looking signal bar. This looks like a much better trade compared to this one. This one, it's hovering above the EMA, it's not touching it. And this one is nice bullish bar closing on its high. We went down, we trapped some shorts, closed on its high, like I said, and unfortunately we just didn't get a trigger. And that could be because, like the previous one, we have this short-term leg down, and now we have a break and a new low of it. So at this point, this looks like the trade to take. So now we really see that there's a visual two legs down. We have a new high, one leg down, two legs down. And if we even widen this uptrend or just focus on this most recent leg up, we see that we still need to test this high because same rules apply for the uptrends. We had this uptrend, we had a break of it, so we must test the new high. So now that we see this, let's see if it worked out. And this is why I preach working for a 1-point scalp. Now this actually did work for almost 2.5 points, but if you went for more, you would have got stopped out by about a tick. So now we see that we're attempting to reach this high, and prices are just being more stacked and stacked before having a nice leg up. So let's see if we can find any more two-legged pullbacks. So now we actually see a failed second entry long. We don't really want to take it yet because this uptrend is still potentially in play, and these bars just look a bit stacked. So let's wait for a potential lower high, which we actually get right there. We can also see that this is a price where we bounced at about 3 times now, and it looks like we're just forming a sort of range. And if we really want to focus on this leg, this looks like a nice steep leg up, followed by a break and a new high. So now we have a new high here. We have a first entry long, second entry long failure. That occurs right here. So the reason we're not looking for second entry longs is because we're at the top of this potential range, and we're expecting to reach the bottom side of the range because most breakouts of ranges fail. And like I said, if we really focus on the thin uptrend, even though there's 3 more green bars following it, it really looks like a very, very steep spike up, a break of it, new high. We're still, once again, looking to test this new low. The price action rules are still in play. So all the traders who went long got trapped here by a failed second entry long. So if we get a lower high, which we have right here, we see the bar ticked up, closed near its lows. That's just confirming the bearish momentum, which is exactly why we ended up working down to the bottom side of the trading range. So now we're going to look for a failed breakout and see if we can get a higher low or a failed second entry short, because now that we're at the bottom side of the trading range, we want to look for long entries. So here we have a second entry short. We have new low, 1 leg up, first entry short, another leg up, second entry short. We don't want to look for shorts though. Let's see if we can get any failed second entry short. So now we're even seeing that we have some congestion at the bottom of the range, and we just rocket out of there. So it just looks very, very congested at the moment. We actually have a second entry long right here. I would not recommend taking this because we reached the top side of the trading range, so we are honestly expecting to go lower. So don't take this long, especially because if we focus on this leg up, we had a break of it and a new high. We're expecting to potentially reach the bottom side of the trading range, which we did, but at this point, the smart traders just waited, especially as we see we actually did reach the low, and prices were just very, very congested once again, going from the bottom side of the trading range to the top. So now we finally break out. So now we want to avoid looking for shorts and go for 2-legged pullbacks in the long direction. Here we have a second entry long right here, but it's below the EMA. Prices are just continually stacked. Let's zoom out, see where we are. So now, even though we had such a strong downtrend at the beginning of the day, we're just working our way towards the high. Traders are trying to push prices back up. But if we really look at this, we just pushed up, and now we're looking at even more congestion and a potential trading range forming. So we don't want to take any entries until we really know what's going on. Nothing looks very appealing. We work to the bottom side of the trading range. So if this is valid, we should be aware that prices could start reversing and go back up at any moment. So we want to look for a failed second entry short. Here we get a lower high or a higher low, which honestly, aggressive traders might take. I look for failed second entry shorts. This is just a failed first entry short essentially, but the reasons that this trade worked out is because we had this leg working down, we had a break and a new low, so traders are looking to reverse. On top of that, it's combined with the range rules that were at the bottom side of the trading range. We had a breakout. We're looking to fade the breakout because most breakouts fail. We have a higher low right here, nice bullish bar. That one went back to the top of the trading range, so now we're at the top. We're expecting to fade the breakout once again, and we just don't get any great entry. It's okay, you got to just stay patient, wait for the great setups to appear. We already had several trades. You don't need many trades at all in a day to become profitable. Actually, it's better to not overtrade. That was one of my biggest mistakes over the learning phase that I had. I just wanted to take every setup possible, and now we actually finally get that failed second entry short. So looking back at this trade, this was just a higher low and essentially a failed first entry short. So here we went to the bottom side of the trading range once again. We have a new low, we went up, we have a first entry short, and we go lower. So now we reached a new low, failed breakout once again. So we broke out, failed, have a leg up. We have a first entry short because we broke below the previous bar. We went up again. If you look closely, all in the same bar, this nice bullish bar ticked below the one previous to it, trapped all the shorts, ended near its highs. All the traders piled on here. That was the trade to take after waiting for all of this congestion to calm down. Worked out before more volatility, more traders pushed it back down. And then we just had some more congestion, more crazy movement before having a nice two-legged pullback. So now at this point, because rather than going to the bottom side of the trading range and back to the top, see how we didn't even reach the highs of this range and we've plummeted down. So now we have to shift gears and think, okay, we didn't reach the highs of the day. So now we're just looking to potentially go short, especially because this breakout didn't fail and we tested the EMA several times. So now that we have another two-legged pullback, we have new low here, one leg up, we broke below with this bullish bar. We have an incredibly bullish bar that closed on its highs, followed by a nice bearish bar at the EMA. So all the traders who went long got trapped by this. Worked out for a scalp before reversing. So now we're just forming another sort of trading range. So at this point, we just are always thinking, okay, let's stay patient, stay patient, stay patient. We broke out of the bottom side, or at least touch the bottom side. We are breaking out of the top. Let's see if this breakout does fail. So here we actually have a second entry long. We have a new high, first entry long, second entry long, but we don't want to be going long at the top of this most recent range, which is why the next bar is a trap looking bar once again. But because so many bars are stacked, I actually would not recommend even trading here. And we just had some more congestion. It was all about staying patient and not forcing any trades. So now let's go take a look at my live trade that I took. All right, guys, so this is me in the middle of a trade that I took. So it was actually towards the end of the day. So it was basically a trap of a second entry long at the bottom side of a range. So it's more of an advanced trade. I always say to go long at the bottom side of the ranges, but in this case, I went short for a specific reason. And as we see, we're in a great runner, which is why I say you should have a scalp portion and a runner portion. So now, if we're looking at my trade, it's just the trade where we have this red arrow here. We went from the top side of the trading range. So we worked down, we had a first entry long, and then we had a second entry long, which obviously failed. So the reason I took this failure is because all the traders who didn't wait for this leg, this 3-bar bearish leg to have a break and a new low, went long at the bottom side of this trading range below the EMA. So even though you should look for failed breakouts, you must wait for the previous trend to be over, at least, combined with the fact that we're at a failed breakout. So when we had a nice bearish signal bar, I knew that we would at least trap some traders who went long at this bullish signal bar. Like I said, it is more of an advanced, nuanced trade, but it's a failed second entry long below the EMA, because that's why I say you should always wait for a failed second entry short if you're going to go long. So if you're really going to look to go long and fading this breakout, you shouldn't just take a second entry long. You should wait for the downtrend to have a break and a new low, first of all. And then, like we said, we want to wait for a failed second entry long or a higher low, at least above the EMA. So the way that I manage this runner is that we have a swing high right there. So I always trail my stop one tick below or one tick above, in this case, because it's a downtrend, a swing high. And we end up getting stopped out at around 17 points. So 17 points times $50 plus the scalp portion of this trade. It should be about a $900 trade. And all you need, once again, in those Apex accounts is just $3,000 worth of profit over a 7-day trading period. So here in one trade, I got basically a third of what I needed. And if you're in a PA account, then you know what we're talking about. Or if you're in 10 or 20, I'll come out with a video of what I'm in very soon. Have a good one.